Morning everybody, Mike Niemiec here with some early morning grain and oilseed comments closing up this week, Friday, March 15th. Kind of a mixed trade, near steady in the overnight session. But I guess what I really want to say is that what we're trying to do, I think, as far as the overnight trade and for today's trade is that we've been on a break for around 2-3 weeks. We've been having a negative USDA report. We've had the funds good sellers. We've had technical selling coming into the marketplace, open interest building, and we may have culminated it here earlier in the week, and I guess that's our objective here today, is as far as just trying to see if we can't have more stability in the marketplace. We haven't seen the open interest really come on down as far as liquidating some of the commitment of traders shorts. Now once again, this is not including soybean oil because that's still the only thing that they're still net long. But we haven't really seen, with the bounce that we've been getting, people getting out of some of these positions. Not that it's warranted. Fundamentals are still non-bullish, but I guess what I'm getting at is that just trying to see if we haven't stemmed the slide of a bit here. We saw yesterday being the last trading day for the March futures. Maybe use those settlements as somewhat of a downside barometer, and maybe just once again try and stagnate the market, see a little bit of recovery, help the RSI, stochastics, things of that nature, try and get back to our pivotal price areas. Once again, we did come from $9.50 beans in the July, $4 corn, and roughly $5.25 July wheat. So it may be somewhat of a stretch to get back to those levels. But what we're really trying to do is clean up the market a little bit and perhaps for the next 2 weeks work our way towards that prospective plantings quarterly stocks report, which is a more important report than the one we just saw. So we'll get our commitment of traders report after the close. We'll assume that we'll still see the net short positions across the floor except for the soybean oil, and that may be a precursor for trade starting off next week. Of note this morning is that what's been coming out of China, they came out and says that their pig numbers are a lot smaller than what the trade was surmising. This goes on the heels of them buying pork from the U.S. in the weekly sales yesterday. Do they really need pork? Does this force their hand as far as the trade talks go to try and prevent food inflation? Trade talks are still in limbo in the sense of any finality. The latest thing was Trump coming on out saying it may be another 3 weeks before we know something more definitive, so that's still on hold. But it was interesting once again to try and see if China's hand is enforced over food inflation. Other than that, we'll be getting a NOPA crush number coming out here later on this morning. The NOPA crush is expected to stay strong, but we're also looking for a little bit of build of soybean oil stocks. That on the heels of the Chinese veg oil market being on the defensive this week, along with the Malaysian palm oil, and the trade still being net long the soybean oil here, may have a little bit more wiggle room to the downside in that market as opposed to the others that we have been mentioning. So once again, a mixed trade in the overnight, but the main goal for today is just try and see if we can provide some stability in lieu of going in direction to the prospective planning's quarterly stocks report at the end of the month. Have a good weekend. Once again, these are my opinions, not that of ADM or ADMIS.